Hello everyone, Jesse Webb, TradersPro. Market conditions remaining bearish in a bull market. Current rank of that bull market is at 10.82 and continuing to trend down as far as the long-term trend, but in a counter trend that is trying to find some support here. We're seeing markets move off of those extreme levels. We've gone from the extreme range over here now. We're moved our way back up into this bearish trend zone. So still in a downtrend, but bouncing out of these extreme ranges. So we'll see if we can get any kind of sustained move here. Futures look like they're down slightly, and if we can start to find some support and start to build some momentum back to the upside. We're also seeing breadth indicator, which is extreme, continuing to move its way back into that trending zone as well, and then sentiment, which actually had a little bit of a pop back up. It was hovering right on that edge right there. So we've seen a nice rally the last 2 days. We've seen the buy-sell ratio also start to move back together here. We're at 0.19. We were at 0.15 the day before that, 0.12, 0.09. 0.14. That 0.09 day was the lowest day, and we were at an extreme here, and we're just starting now. We're starting to see those curl back together again. Ultimately, what we would want to see for a healthier market is we want to see this green line and the red lines come back and cross back together again. When that happens, that means that the buy-sell ratio then is above 1 right here. Okay, so that's one of the things to be watching for. If you're kind of waiting for confirmation of a bullish trend, is to wait for that buy-sell ratio to cross back up again. That could take a little bit of time. This could be an early entry. Let's look at that S&P 500 chart here, because we've got a little bit of a bounce, but it's just from an extreme level. We've now moved from extreme back into this bearish trend zone. We are still in this long-term uptrend, so at this point we can still consider this to be a counter trend rally. If I go out to that longer time frame and kind of look to see on this 2-year time frame, the 2-year time frame is still grabbing that all-time high and this October low as our current trend. And we've retraced all the way back up to around that. Let's see if it's 786, 886, right around, up into that 786, 886 retracement. Obviously the 100% retracement takes us all the way back to where we were. Okay, 100% retracement is here. So we had a pretty deep bearish retracement. Typically when it gets back up above the 618, that is considered a new trend. And so if we take that timeline, though, what I really wanted to do is just take this timeline here, drag it across, and look to see we're at that. We talked about this yesterday. This 382 retracement level is also right at this support area. And what we want to see is a healthy close back up above that. We did close. This is 418. That level is 416, about 417. So we closed up above that level. Let's see if we can hold that level now over the next day or two. And that's ultimately what we'd want to see. If we can see a hold, a rally, and even a retest, a pullback and a retest. If we start to rally anywhere around that 416.90 level, 416.65 level, and move higher and then retrace and test that, I think we could see a shot back up at that 433 range. From there, again, same thing, a little counter trend. If we're holding that stair step, moving higher, finding support, moving higher, then ultimately that will be on our way towards a little healthier uptrend at this point. If we take a look at what's happening in the sectors, we've got sectors ETF. Let's see how much those moved yesterday. We did see a few more here now moving into uptrends. So that was a pretty significant day yesterday to start to shift the sectors as well. We had a lot of these that were just in sell. They still are in this hold range. So we're seeing some early indication on some of these sectors: base material, consumer services, real estate, utilities, financials, consumer goods. Those had some of the biggest moves yesterday and are starting to work on more of an uptrend. Let's look at some of those chart patterns and see. I didn't want to go all the way out to that 2-year. Let's just go to the 6-month time frame. Still in nasty downtrends. Remember that this can still be considered the momentum zone, but just the other direction. So when we have a trend that is snapped this direction on the chart, remember the snap tool will automatically find the high and low on the time frame, and that's the trend for that time frame. So here we've got this downtrend, an obvious downtrend, and then any counter trend retracement back up to that. If it retests these 236 levels, then watching for more downside. That's still the state that we're in. We're still in a state of deeply oversold conditions and then starting to work our way back. Same with the S&P as well, but not quite as bad as some of these other sectors like basic materials, real estate. Where's that real estate fund here? You can see that real estate fund. Here's our short-term uptrend. We've now moved that back to the upside with a pretty decent day yesterday, and even a little retest. We had a low here and a retest and a pop. All of these are going to be working their way back to that 236 level. That's going to be the area where we want to see if we get a reversal back down, or again, if we can retrace that, find some support. Now at this level, bump back up again, and then pull off something like this. Okay, as we start to see that happen, then we get a little more constructive bullishness and a little more confidence in the overall direction. Even though we're getting early signs here that the trend and the major sectors are also starting to shift. It's just a little bit early. Let's look at commodities. We've got gold, which is moving nicely, continuing to move up. In this case, the time frame for the 6-month chart for gold is still down. For the 1-year chart, though, we've looked at this and it is up. We've got this 50618 retracement zone, and we're up in the momentum range. Healthy looking trend profile for gold right here on the 1-year time frame. And then also oil is the other one we've been paying attention to. That one also is in a uptrend for the 1-year time frame, but it's retracing pretty significantly right here. If we look at the 6-month time frame, you can see the support range. So oil could be pulling back into a little deeper retracement zone. It's going to be testing all of this support right here relatively shortly. And ideally, I would prefer oil drop all the way back down to 10. It's just one of those things that as far as it being high, really is not a benefit to anyone other than those that are mining and drilling oil. Okay. If we take a look at some of the new buys in the list today, we've got eHealth, which is a nice looking pattern. Hasn't quite broken into that upper momentum zone, but has a healthy looking trend profile here, and also had an uptrend and a nice counter trend retracement. Good confirmation bar, 5% on that move for eHealth yesterday. And there were 2 or 3 others that looked that were good looking chart patterns. Let me get the right setup here. ETA, okay, FUSN. This was a nice looking medical drug. We saw a pop on a couple other medical drugs, some generic drugs, and again, still in a downtrend. This is also a downtrend. Well, this is the uptrend for the 1-year time frame, rallying significantly, and pretty big move yesterday. 15% move. These are always really volatile. Be cautious. Make sure your position size is small enough to allow for this kind of volatility. 15-20% to the upward or the downside on a stock like this, FUSN. RELY, this is a stock that actually has been in this upper range now for most of this counter trend, had a bounce off of the momentum zone, the 236, still holding, and then a confirmation bar pardon me, in that upper range right there for RELY. So seeing quite a few stocks in that list to be able to consider for your portfolio. That'll do it for today's update. If you don't have full access to the site and software, you can sign up with the link below, and we look forward to having you. Have a fantastic day today.